America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Would you like to know the absolute latest on any commercial real estate related subjects? Then check out our on-demand show podcasts. For example, we just completed an informative show on C-suite social media strategies and 2 enlightening shows on 2013 market expectations. You can access the shows anytime on your smartphone or computer. Visit iTunes or the show website, commercialrealestateshow.com. Well, today we're discussing the healthcare industry and medical real estate. Please welcome my next guest, Mark Engstrom, Executive Vice President, Healthcare Trust of America, a self-managed real estate investment trust listed on the New York Stock Exchange under the ticker symbol HTA. Since 2006, HTA has built a portfolio of acquisitions that totals approximately $2.6 billion, comprised of 12.5 million square feet in 27 states. Mark, thanks for joining us today.
Thank you, Michael. Really appreciate the opportunity to be with you.
Well, thank you. And, now that the elections are behind us, we know that Obamacare, the Affordable Care Act, looks like, I guess, it's here to stay. How do you think that will affect the healthcare industry and medical properties?
Well, you're exactly right. I think with the Supreme Court decision last summer, it became pretty clear, and it was verified with the elections in November. We're clearly operating, and the healthcare industry is operating under the Affordable Care Act. And I would also add to the well-documented aging of the population as being the 2 primary drivers for medical office space and the demand for space in our sector. The acquisitions of physicians by hospitals and health systems, or physicians aligning themselves with significant, larger practices, are clearly being driven by the changes in the nation and through the Affordable Care Act and also the demographics. We see a continued shift of care to outpatient, which is a more cost-effective setting, and it's the only way that they're going to accommodate the additional demand of 30 to 40 million of additional insureds that were previously uninsured. So we see it as a positive impact for on-campus medical office buildings, of which HTA is 71% on campus. Even more importantly, 96% of our medical office buildings are affiliated with strong local and regional health systems. So we'll play in that sector, and we see demand increasing over time.
Okay. And as you're talking to investors and healthcare providers, do they feel more confident now than they did, say, a year ago in the industry?
Yeah, there's more certainty. The markets don't like uncertainty or risk. We're seeing that in the markets today with the fiscal cliff. But yes, I think from a healthcare standpoint, the regulations are being written and being announced. So there is that is rolling out. I think as more certainty comes around it, health systems are starting to make decisions, making commitments to longer-term leases to take on additional space for their program growth. And same thing with physicians. They're more willing now to sign longer-term leases because the Affordable Care Act is here to stay.
Right. And how do you think that will affect medical office building investment sales this quarter? Do you expect to see a surge of sales because of the possible tax law changes? And what do you think next year we'll see for volume?
Yeah, no, that is a good point. This year is on track for about 120% increase over 2011. Expected to be between 4.5 and 4.8 billion of medical office sales this year. So that in and of itself is significant. I think the fourth quarter will, much like the fourth quarter of 2010, will reflect a lot of sellers that are looking to lock in their 15% gains, knowing that the capital gains treatment is likely to change. And so we are seeing that. I wouldn't say it's quite at the pace that we saw in 2010, but certainly there are sellers looking to close deals by the end of the year. For 2013, I think there will continue to be a lot of activity in the space. Hard for us to say whether that's going to be the same as 12 or not, but I think there is an understanding in the space that the changes are taking place and that institutions with access to public capital, the public markets, both debt and equity, are going to continue to be acquirers of properties, which I think will continue to drive sellers to sell. And it may be that they need to find other forms of transactions, though, that may have some kind of beneficial tax treatment, such as an UPREIT.
Right. Do you have any recent news or announcements from Healthcare Trust of America for us, Mark?
I would tell you that 2012 has been a great year for HTA. As you know, HTA listed on the New York Stock Exchange in June. That was a significant opportunity for us to get liquidity to our shareholders, as well as to access the public markets, both for debt and for equity. So that positions our company, we believe, differently moving forward, and it's certainly a milestone that we're proud of. I think the other thing that we've accomplished this year that's significant is that we're now providing asset and property management services to over 70% of our portfolio. So instead of providing services through third parties, we have direct relationships now with our tenants and the health systems that we partner with in the local markets.
Well, that's certainly strong. So now you can, your fate's in your own hands now, right?
Well, it's important for a couple of reasons. One, HTA was founded in 2006. We really branded ourselves HTA in 2009. So it is somewhat getting our name out in front of both tenants and hospitals and the public at large. I think it also has a bearing on the cost of occupancy for our tenants. To the extent we can reduce fees that aren't to the benefit of us or the tenants, it gives them a lower occupancy cost. It should make us more competitive in the local market.
Right. Well, you guys sure have a good reputation in the industry, Mark. And do you have any tips for our listeners related to healthcare real estate?
It'd be a pretty broad comment, but I think the demographics of the aging of our population will go on for the next couple of decades. I think the change in the reimbursement and the way it's going to be paid for, while not totally understood in detail, it's here to stay. Will continue to drive changes in the industry. I think the opportunity for investors has to be specific to those investors' investment profiles. But for HTA, we're very pleased to be in the public markets, to have access to capital, and to have a $3 billion enterprise value that will allow us to be competitive going forward.
Mark, what do you expect for performance in the sector moving forward?
Well, Michael, one of the things that HTA did, or that we did as we approached the public markets, was look for a way to differentiate ourselves from the other publicly traded healthcare REITs. And there's really two primary things. One is that we're a medical office building focused platform. We're 90% medical office. There's only one other platform out there that's similar, 85-90% medical office. So we think that differentiates us from the diversified healthcare REITs that are out in the space. Gives us a very specific asset focus and very specific performance, which we think is a differentiator. The other was that we do not have a development capability within this platform. We don't plan to have a development capability in the platform, so we don't take development risk, and we don't have that drag on our earnings. But what it also allows us to do is work with local and regional medical office developers who have products either for development or in their portfolio, and they want a place to monetize that, but they don't want to be sort of usurped by a larger platform that's going to come in and take over that relationship. So I think those are the two things that we've really set out to set us apart in the industry, and we're certainly working hard to make sure that we can capitalize on those.
Yeah, well, I think that's important. I mean, the medical office market may sound simple to folks, but it's certainly a lot more involved than the normal office market, isn't it?
Well, I think it used to be simple. It's certainly not as simple today as it was when people like you and I got into the business 20 years ago. But it's an exciting time to be in this space. It's a maturing asset class, and the one that has a lot of attributes in an uncertain economy. It's defensive, it's conservative, it's something that's very stable, and that sometimes isn't very exciting. But in an environment and an economy like we're looking at for 2013, with the fiscal cliff and so on, that's pretty attractive to investors these days.
It's exciting today. Well, Mark, thanks for joining us. We appreciate it.
All right, Michael, take care.
For more information about HTA, visit HTAREIT.com. Stay with us. More intel headed your way. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold, Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cohn Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit cohnresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com.